Just in Ethereum, whales bought more than 818,000 ETH, worth over $2.5 billion on June alone. This is the biggest daily inflow for ETH since 2018. And this comes at a time when price is showing some big bullish signs. In this video, I'll explain why this could be extremely bullish for ETH and where we go from here. Taking a look at the price chart, we can see that ETH is trading within a multi-month range right now, ranging between $2,150 on the lower end and $3,600 on the higher end. Now, it is also important to note that this current price range is also occurring at a time where ETH is consolidating above key support levels like the 50 EMA or the 200-week IMA, so all of these factors combined make for a very nice price chart. But what's even more interesting is how ETH has been behaving in past price ranges like this. If we take a look back at the 2017 bull market, we can see that ETH actually did something very similar to what it's doing right now. If we zoom out, we can see that ETH was actually in a similar price range back then, ranging between roughly $10 and $20 per ETH. Now, obviously, no one is saying that ETH will go from $3,600 to $1,500 overnight, but what it does show us is that there could be a lot more upside than meets the eye, especially if we combine the current price action with some on-chain data. And this is where the recent data from Glassnode comes in. Taking a look at the chart, we can see that wallets holding between 1010 which are essentially considered the mid-tier whales, these wallets recorded a net inflow of 818410 ETH, worth roughly $2.5 billion on June alone. This represents the single largest daily accumulation by mid-sized ETH wallets since 2018. The last time we saw such massive daily inflows, ETH was trading around $90, meaning this level of buying interest is occurring at much lower prices today. This suggests that these whales continue to accumulate ETH with growing conviction. And this is really interesting to me, because when we think about the top holders of ETH, it's not individual retail traders like you and me. It's either going to be large institutions like pension funds, hedge funds, ETSC, or it's going to be centralized exchanges who hold a lot of ETH. So to see the balance of power continue to shift towards these larger entities is a very bullish sign for ETH. Since May 2022, these mid-tier ETH wallets have consistently accumulated. On June, their holdings rose by almost 3%, reaching a total of 16.2 million ETH, up from 11.87 million ETH a year ago. And this increase in whale activity coincides with a sharp rise in institutional flows into ETH-focused funds. According to the latest weekly report from ETH, investment products attracted $583 million in the week ending June 13th, bringing year-to-date inflows to $2.28 billion. This suggests that the recent dip in ETH prices has been viewed as a buying opportunity by many institutional investors. So, to recap, we're seeing more whales buy more ETH, and we're also seeing institutions continue to flow money into ETH products. All of this is happening at a time when the overall market sentiment is quite bearish, and when ETH is ranging within a multi-month range, kind of consolidating. This all makes for a very intriguing situation. And given the similarities with ETH's 2017 bull run, I think it would be unwise to simply draw a straight line up from here to the moon. We might still have some more consolidation ahead of us. But that said, it is really hard to ignore the amount of buying pressure that has been building up behind the scenes. With all this being said, let's get into my price targets for ETH. In terms of my short-term price target, I think the most likely move for ETH is to break out of its current price range to the upside. And it's not just me who thinks that ETH could reach $10,000. Milky Bull recently stated that his short-term price target, $4K, and that $10,000 is still a possibility if there is strong momentum post-breakout. He further clarified his stance by adding that his $10,000 projection is not based on any complex models, but rather on his observation that ETH's current supply shock is similar to what occurred prior to its 2017 bull run. And obviously ETH's current price action also supports this view. With all this in mind, where do you see ETH going next? Let me know in the comments below. Next, I want to talk about some exciting news involving Lido, the largest liquid ETH staking solution. Lido recently announced that they have expanded to the Polygon, Binance Smart Chain, Optimism, and Arbitrum blockchain. They're launching on Avalanche and others soon. And so if you someone who wants to stake ETH, but doesn't want to pay the high gas fees on Ethereum Monet, then this is great news for you. Because now you can stake ETH in a liquid, decentralized manner on many different popular chains. The way it works is simple. You deposit your ETH into Lido and receive stETH in return. stETH is a fully liquid token that represents your share of ETH on various DeFi protocols to earn additional yield. Now, normally I would say to go and stake your ETH on other chains because usually the yields are too low to be worth it. But with Lido, the rates are crazy high because there isn't a ton of competition in this space. For example, users on the Polygon network are earning an annual percentage yield of over 4 million. Yes, that is correct. 4 million APY on Polygon. Of course, these rates are subject to change as the market evolves. But hopefully this gives you an idea of the kind of yield you can expect. It is important to note, though, that the Lido ecosystem is quite complicated and there are many risks involved. The best way to learn more about them is through their documentation, which is linked down below. Last but not least, if you want to stay up to date on the latest in crypto, join our brand new free newsletter, so please consider joining our growing list of subscribers by clicking the link down below. That's it for this video. Smash the like button if you enjoyed, and if you haven't already, consider subscribing. Thank you guys so much for watching, and until next time.